Hey everybody, the main events right now are Tesla and Netflix that they are moving the markets. And they had relatively a good report, but this market is priced to perfection and won't accept anything less than perfection. And so Tesla beat on both revenue and earnings. Their margins decreased a little bit. Their margin of profit was 18.2%, and they were expected to make 18.8%. Now, that is a big decrease from a year ago. It was 25% margin a year ago. And it keeps going down because they cut the prices 30% on some models just to increase demand. Their inventory, their backlog of cars that they've made but haven't sold yet has increased to 16 days. You know, at one point, Tesla had like a 2-day inventory. So there's less demand, and they've had to decrease the prices with the economy and so forth. Their profit increased. It was 91 cents per share in the second quarter, and 81 cents was expected. So they beat on earnings and on revenue. Their revenue is up 47% from a year ago, and they're projected to make 1.8 million cars in 2023. But again, perfection would be if they hit 2 million. Now, Elon Musk thought they had an outside chance of hitting the 2 million, but this market is very unforgiving because it is priced for perfection. Its production of cars will grow by 50% in 2023. And they have all sorts of things going on. They're looking into building cyber factories in Mexico, talking with India about this. There's so much going on with Tesla. And they just had the first Cybertruck roll off the production line in the Austin, Texas Gigafactory. But this is not really an item that's for sale. It's a release candidate, they call it. But they really won't start producing it, the Cybertruck, until later on this year in 2023. And they won't hit full production until sometime in 2024. So the Cybertruck has been a long, hard road for them. And it looks like it's going to be accepted by the public, but they've got a lot of competition with the Ford electric trucks and with Rivian. And Rivian is just it's such a cute truck. I can see why people that were into camping and so forth would go with the Rivian truck, which is also more conventional. Not everyone wants to drive a truck that looks like an armed personnel carrier out of the future that could destroy mankind. And then Netflix, it's much the same story, where they did well, but it wasn't perfection. Okay, they added almost 6 million customers, and that was triple what was expected. And they have about 238 million members right now, which is up 8% from a year ago. And they beat on earnings. They had $3.89 versus $2.85 of earnings that were expected. So they beat on earnings. Their revenue wasn't quite what analysts thought it should be, and they projected having a lower third quarter earnings than analysts thought they should have. So again, it's good, but not good enough when you're priced for perfection. They're An ironic thing is that their free cash flow increased. Their their free cash flow increased to 5 billion when it was 3.5 billion previously. And this is because of the actors and writers strike, because they didn't have to pay the actors and the writers. The free cash flow improved immensely. So these are the strange times we're living in. And then the atmosphere on the market, stock market, are influenced by things like Goldman Sachs. Goldman Sachs put out a warning that their earnings weren't going to be so great. Okay, they came in a little better than Goldman Sachs thought they would, but still, having such an old and venerable bank as Goldman Sachs not do that well, it alarms the stock market. Let's put it that way. Their return on equity fell to 4%, which is the worst among the major United States banks. They said they were making less money on investment banking, doing things like mergers. Their earnings fell 58% in the second quarter because they weren't doing so much investment banking, which is where they make a lot of their money. However, they thought this was a cyclical thing and it would improve in the future, which is good. They did much better with their equity trading. It was up significantly, and they did much better at that than the other major banks. It's just a surprise to Wall Street that the other banks are reporting good earnings, and then something as old and venerable as Goldman Sachs reports difficulties, which is when the stock market is priced to perfection. It creates an atmosphere where it's difficult to go forward. So these were the events moving the stock market. Tesla's operating margin was 9.6% in the second quarter, the third straight period of contraction. Even after markdowns, their global inventory rose. And Netflix did benefit from cracking down on passwords, and that was seen as the main reason why they added almost 6 million subscribers. Their third quarter projections came in below estimates, and the stock market is all about the future, and the future. And Goldman Sachs freaked the stock market out by posting earlier that it was going to have terrible earnings, and it did have terrible earnings, with its earnings falling 58%. However, the stock overall rose, and I think it's because their equity trading was better than the other major banks, and also they thought this was just a cyclical problem. We do have good news coming, and Trueflation shows that, which uses many more sources of data and is much more current, shows that the real inflation rate right now is 2.13%. Wow, that's awfully close to the 2%. But the August 10th number that comes out on the July inflation is going to come out worse than it actually is, simply because of the base effects. The particular month that you're being compared to the year before, it was 0% supposedly in 2022. And when you're comparing against such good data, it makes whatever data you collect look worse. So we have that base effect thing where it's going to look worse than it really is. Inflation is truly going down. It's not accelerating, at least. It's going up 2%. What's hard to see is it jumped a lot. And what we're really saying is that the increase on the increase is less than we thought it would be. Okay, so it's still bad, but it is coming to a point where we can see things are starting to level off. Prices aren't going down. They're just not increasing as fast as they used to. So I think the market's going to be very jumpy and very volatile and go all over the place. But I think my tendency is to buy the dips and then ride it up and then sell it. This I'm doing on a day trading sort of basis. I don't really trust this market totally. I want to get past that August 10th bad reading. Exaggerated reading on the downside on August 10th because I think things improve after that. Also, we have to get by the July 26th increase of the interest rate by 1/4%. But a lot of that will depend on how hawkish Jerome Powell is during the interview. So I think my tendency is to buy the dip and ride it up and then get out on a daily basis so that I continue to collect interest on the money I'm investing in, because it is a 2-day delay before they settle. And if you buy and sell on the same day, it's as if the money never left the account. Thanks for listening and watching. Check back in the future as I try to hit the main events that are driving the market.